So the stock market can be a confusing and intimidating place for beginners. But with the market down so much this year, now is one of the best times for beginners to start investing into stocks. In this video, I'll give you 7 super simple tips showing you how to invest in stocks in 2022. Hi, my name is Dan. I try to make simple stocks, options, and finance. If you find this video helpful at all I ask is for you to hit the like button and comment below with any thoughts you may have. Okay, before we dive into this video, a few things about the stock market you should know. For the most part, the stock market is a collection of NASDAQ, Dow Jones, and S&P 500 companies where people buy and sell shares of ownership in those businesses. That's why if you ever turn on the news or hear about what's going on Wall Street, you'll likely hear about the NASDAQ, Dow Jones, or the S&P 500. The prices of these stocks and every single stock are constantly changing, and they are affected by a variety of factors, including the overall performance of the company, the broader economy, and global events. And while it may seem daunting at first, there are some basic concepts that can help beginners navigate the stock market. Number 1, it is important to understand that stock prices are not determined by random chance. Instead, they are set by supply and demand, which means that there is always a reason behind changes in prices. And that's why it's so important to keep up with what's going on in the world and in the economies around the world. So why are stocks so cheap this year? In a very short and condensed answer is because of inflation, supply chain issues, and the war in Ukraine. Number 2, it is important to know that a lot of stocks are largely driven by algorithms and large hedge funds. And while retail traders do play a role in stock prices, it's important to know that institutions and hedge funds have a huge role in stock market prices. Number 3, it is important to remember that the stock market is not gambling, but rather investing. And while there may be some risks involved, careful research can help to minimize risk and maximize potential rewards, especially in the long run. And remember, when you buy a share of a company, you're investing into that company. If the company fails, you lose money. But if the company succeeds, you make money. In that sense, the company is working for you. Now, options, on the other hand, can be borderline gambling, and we'll talk more about that later. Number 4, it is important to have realistic expectations. The stock market can be a great way to grow wealth over time, but it is not a get-rich-quick scheme. If you're going to buy and sell a stock within days, you're basically day trading, and day trading and investing are very, very different. Most day traders and retail traders who buy and sell the dips underperform an investor who just dollar cost averages into exchange-traded funds. Now, what does that mean? That takes us right to number 5. Number 5. Dollar cost average exchange traded funds may be your best strategy if you're a retail trader. And this came from the legendary Warren Buffett himself. For most retailers who don't have the resources and time to analyze companies, it's probably best to just buy on a consistent basis ETFs, also known as exchange traded funds. An ETF is just a fund that invests in a very diversified portfolio of stocks. Some examples are VTI, Vanguard Total Index, that tracks the overall stock market, or stock ticker VOO, Vanguard S&P 500, which tracks the S&P 500 largest companies. Okay, number 6, investing is buying into a stock that you believe will do well in 3 to 5 years. It is looking at the company fundamentals, the cash flow, the earnings, income statement, earnings calls, and just finding out as much information about the company to know if you want to invest in it long term. Number 7, invest in stocks with options. If you remember what I said earlier, options is borderline gambling, with most option strategies except one. And that is the option strategy that Warren Buffett himself uses: selling or writing put contracts. You're essentially acting like an insurance company where you agree to buy 100 shares of a company per contract if the stock goes down to a certain price. But with this option strategy, not only do you get the stock at a discount, you also get paid a premium whether the stock goes up or down. I hope this video is helpful for you. If you like this kind of content and want to follow more for more stock investing tips with more specific tips, make sure to like and subscribe. Thank you so much for watching, and I'll see you around in the next video.
With every star, we are